In this lesson, I'm going to show you a simple, objective way to structure, follow, and even trade any market in any time frame. This is going to be the first part of a two-part series. What we want is the ability to come to any market and to be able to quickly orient ourselves and map what price is doing. This brings a certain groundedness, brings a certain independence, and we're going to do this using swings. So let's start out with a swing definition. A new high confirms a new low. This basically says when price makes a new high, beating the previous sellers, the low is confirmed, and vice versa. A new low will confirm a swing high. So that's our basic definition. This swing will have components, basically a reaction leg and an impulse leg. So the reaction leg is like the pullback leg of the swing, and the impulse leg is what's taking out the high or the low. So if you look at this particular market here, looking at a cake monthly, we have a big fat monthly bar chart here, so that's the way we can follow it live. When we finish here, we'll go look at various other markets, currencies, futures. But we want the ability to come in here and quickly and easily orient ourselves. So for instance, we're just going to follow the definitions. A new high confirms a swing low. So if you see, we can also find the components in here. The reaction leg and the impulse leg. We want to be able to see the market and experience the market simply in swings, just like the model. That's why we're structuring all of the chaos. See, it's going to look just like this, and we want to experience the waves in this way. But first we need to go through a little bit of practice. This is like doing push-ups. So as you see here, a swing is a swing is a swing that meets these definitions. So even this meets the definitions of a swing, a reaction leg and an impulse leg. A new high confirms a swing low. So this is also a swing. There's the reaction leg, the impulse, the reaction, the impulse. So any new high, any new low will give us the definition of a swing. So we need to make a further distinction. And what we're going to do now is make the distinction between major and minor swings. That's going to be a simple definition as well. In this first part, we're only going to concern ourselves with the major. In the second part, we'll talk about the role of the minor. But the major swing is going to be the largest reaction leg in your data frame, basically in your frame, however many amount of bars you're looking at. If this is the frame you're looking at, it really doesn't matter. The definitions will apply. Then you'll see there's a swing, there's a swing, there's a reaction leg, there's an impulse leg, there's a and that's my biggest reaction leg in that frame. But let's take where we've started here. Since this is the reaction leg, remember it has to be confirmed, right? It has to make a new high. It's the biggest. It's bigger than that one. It's bigger than that one. It's bigger than that one. Even though these are swings, even though this is its own swing here, we can see that this is the biggest. So this is going to be the major reaction leg. Now what we're going to do with this major reaction leg, now that it's defined, is use it to follow the market. So anytime the market pivots, we're going to basically copy that length to the pivot and watch price in relation to that. We're going to follow a market in that way. And it can do many things. It can pivot here, not make that length. It can pivot here and go past that length, or it can pivot and turn at that length. And so this is how we're going to follow a market. And you'll begin to see how this relates to any method you might use. Because once we can structure a market, we can then take very precise measurements. So for instance, if we're using median line tools, I'm going to go A, B, C. And you see this is what a median line set does. It describes and projects this wave. It takes the A to B and projects it from C. Even if you are using some other type of indicator, you will take your measurements very precisely on relative swings. So note that right here, while I'm swinging, this is not a confirmed low because it has not made a new high yet. This one is a confirmed low because it has made a new high yet, and this is our projection. So we'll go and look at following these major swings in a few other markets and do a little practice. Alright, I switched over to my futures layout. These are basically my day trading charts, various tick charts. What I think we'll do is break this series up into 3 parts. Alright, and what I want to do is just leave you with something you can look at and map, and then we'll come back to it. So, for instance, and these result in actual trades for me, by the way, but don't make this a system just yet. The whole point is to learn to make distinctions in price flow to where we can read it very simply, and then price will become our teacher. Price will tell us what to do. Price will tell us how it moves. We won't have to rely on indicators, experts, news, anything else. It's all in price. So take a look at this market, structure it, and when I come back in the next part, I'll show you what transpired. Just remember, we're going to have some simple definitions. A new high. Confirms a swing low. Doesn't matter which swings we're looking at. This is also a swing. A new high confirms a swing low. So we're going to make a further distinction here and put another objective definition in. This is very objective and it's very simple. Don't concern yourself with minors right now. We're just going to look at majors in this first part. Maybe the third part we'll look at minors. So a major is going to be the largest reaction leg in your data frame. Remember, your data frame is, this is your frame, whatever amount of data you're using. So the major is going to be the largest reaction leg. Reaction leg is just a component of the swing cycle. This is a reaction leg too. So the largest reaction leg is going to be this one. See, that's a different animal. Right? It's going to be like this. So go ahead and map this market, find your largest reaction leg, and then we'll come back.